HEDERA just pushed a major network upgrade while Whales quietly scooped up $26.8 million worth of HBAR. But here's the twist. Smart money is walking away. The price is teetering on the edge of a bearish wedge. AI agents are now building on the network, and Australia just picked HEDERA for wholesale CBDC trials. So why are the smart traders backing off while Whales double down? Something doesn't add up. And today we're connecting the dots. Welcome back to the channel. If you're new here, I break down the crypto moves that actually matter. No fluff, just data and real analysis. Hit that like button, smash subscribe, and turn on notifications because HEDERA is at a crossroads right now, and you need to understand what's happening before the next move catches you off guard. HEDERA upgraded to version 0.66 yesterday, October 8, 2025, at 1700 UTC. According to the official HEDERA status channel, the maintenance window lasted about 40 minutes with brief service disruptions. Now, upgrades happen all the time in crypto, so why does this one matter? Because it's not just back-end housekeeping. This upgrade expands AI agent tooling at the exact moment institutional players are testing HEDERA for wholesale CBDC settlement. That timing isn't coincidental. When infrastructure improvements align with real-world pilot programs, developers take notice. And when developers build, liquidity follows, eventually. Meanwhile, HBAR's price action is telling a completely different story. The token is down nearly 6% in the last 24 hours. October has been kind to Ethereum and BNB, but HBAR got left behind at the party, even with a modest 1.4% gain over 7 days. The momentum isn't there. On-chain data reveals that whale addresses holding over 10 million HBAR jumped from 129.18 to 130.96 wallets since October 6th. That's at least 127.8 million HBAR added, worth roughly $26.8 million at current prices. So whales are accumulating aggressively during weakness. But smart money, they're sitting on their hands. This is where things get uncomfortable. The Smart Money Index, which tracks wallets with historically profitable trading patterns, has flatlined after dropping from its October 6th peak. Translation: the traders who usually front-run bullish moves are no longer buying. They're not shorting either. They're just gone. When whales accumulate but smart money exits stage left, you're staring at a classic divergence. And divergences rarely resolve cleanly. HEDERA is trading inside a rising wedge pattern on the 12-hour chart, and technical analysts know this setup leans bearish. Alright, so here's the situation. The price is testing the lower trend line near 21 cents, a support zone that's held multiple times since late September, but, support levels are only support until they're not. If 21 cents breaks, the next stop is 20 cents. Then 19 cents. That's a potential 10% drop from here. The bull-bear power indicator just flipped red again, which historically precedes corrections. The last time BBP turned red was September 4th, and bulls barely managed a short recovery before weakness returned. So, we've got whales loading up, smart money retreating, technical structure cracking, and a network upgrade that should be bullish, but isn't showing up in price action yet. What gives? Let's break this down with some actual analysis instead of just reciting numbers. First, whale accumulation during consolidation is not necessarily bullish short-term. Large holders buy dips because they think in quarters and years, not days. They're positioning for future catalysts. Like the CBDC trials wrapping up in the first half of 2026, Australia's Project Acacia selected HEDERA on July 10, 2025, to test wholesale tokenized asset settlement alongside stablecoins and bank deposit tokens. According to the Reserve Bank of Australia and the DFCRC, the trials will compare infrastructure performance across public and permissioned networks. That's institutional validation, but the report isn't due until mid-2026. Whales are front-running a catalyst that's still 6 months away. Smart money isn't patient enough to wait that long. They rotate into assets with nearer-term triggers. Second, the developer momentum is real. HEDERA published its September 2025 developer highlights on October 2nd, spotlighting AI studio improvements and clearer workflows for building intelligent agents on the network. A deep dive on the HEDERA Agent Kit dropped about a week ago, detailing plugins that let agents mint tokens, send messages, and manage accounts with code-level examples. This isn't vaporware. The Hello Future Origins hackathon ran from July 21st to August 8, 2025, and during that window, teams shipped agentic wallets, DeFi co-pilots, and guided onboarding tools. According to AngelHack's program page, the trilogy format extends activity into future cycles, keeping builders engaged as features evolve. But developer activity doesn't pump prices immediately. It builds long-term network effects. Think of it like planting seeds. You don't harvest the next day. Right now, HEDERA is in accumulation mode, not distribution. The wedge pattern suggests traders are losing patience, but the fundamentals are quietly stacking up. My take? The 21-cent support is critical. If it holds, whales get rewarded for their patience, and we could see a slow grind higher into the first quarter of 2026 as CBDC trial updates trickle out. If it breaks, we're looking at 19 cents, and that's where I'd expect smart money to re-enter. The rising wedge breakout point sits around 23 cents. A daily close above that level invalidates the bearish structure and signals renewed strength. Until then, HBAR is stuck in no man's land. Fundamentally improving but technically fragile, HEDERA's strategic positioning is genuinely interesting. The network isn't chasing retail hype. It's targeting enterprise and government use cases. AI agents building on HEDERA through structured toolkits is the kind of infrastructure play that doesn't make headlines until it's already embedded everywhere. The CBDC angle is even more compelling. Australia's wholesale trials aren't just HEDERA, they're testing multiple platforms, including stablecoins, bank deposit tokens, and a pilot wholesale CBDC. But being selected for regulated market experiments alongside traditional financial infrastructure is a big deal. The Reserve Bank of Australia doesn't pick networks casually. They're evaluating interoperability, performance, and controls across varied designs. If HEDERA performs well in those trials, the credibility boost will open doors to other central banks. That's a long-term narrative, but narratives drive crypto cycles more than fundamentals ever do. Now, the price action. A 6% drop in 24 hours during Uptober is embarrassing when Ethereum and BNB are posting gains, but context matters. HBAR is still up 1.4% over 7 days, which means the sell-off is recent and sharp, not a slow bleed. Sharp drops on low volume often signal capitulation by weak hands, not institutional distribution. The whale wallets tell that story clearly. So, here's the scoop: addresses holding over 100 million HBAR have jumped from 38.46 to 39.56 since October 6th, and well, that's not your average retail investor. That's some serious strategic positioning. Now, the smart money index flattening. That's the wild card in play here. You see, smart money doesn't exit because the fundamentals changed. They exit because the trade setup changed. They're momentum players, not holders. They'll be back when the chart structure confirms a reversal, not a moment before. Oh, and the BBP indicator turning red again? That tells us that bears are in control right now, but trust me, control shifts fast in crypto. Remember, the September 4th BBP signal led to a correction and then a recovery attempt. This time around, things could follow the same script. Or, who knows, it could break lower if the whales decide to stop buying. Technical traders are watching that 21-cent mark like hawks. Multiple touches on that trend line without a breakdown show strength. But let's be real, each test weakens support. On the flip side, a volume spike above 23 cents completely flips the script and opens the door to 25 cents and beyond. Here's the part most analysts won't tell you. Price action lags narrative by weeks or even months in the crypto world. HEDERA's AI agent toolkit and CBDC trials are real developments, but the market hasn't priced them in yet because, well, they're not exactly flashy. No celebrity endorsements, no meme potential, no viral tweets, just boring, competent infrastructure work. And that's precisely why whales are buying and smart money isn't. They're playing different time frames. Whales are betting on narratives maturing, while smart money is betting on momentum confirming. So what's the move? If you're trading short-term, respect the wedge and wait for a clean break above 23 cents before entering. If you're holding long-term, the whale accumulation during weakness is actually reassuring. It suggests informed capital believes the risk-reward tilts favorable over the next 6 to 12 months. My opinion, the CBDC trials are underpriced. If HEDERA delivers strong performance in Australia's tests, that's a headline that moves sentiment. But we won't know until mid-2026. So, this is a patience play. The risk, of course, is that the market doesn't care about fundamentals until it does. We've all watched great projects bleed while garbage pumps on vibes alone. HEDERA could do everything right and still chop sideways for months. That's crypto. But when the setup aligns, narrative plus momentum plus technical breakout, that's when patient capital gets rewarded. Right now, we're in the accumulation phase where nothing exciting happens, but everything important is being built. And if you found this breakdown useful, hit that like button and subscribe so you don't miss the next one. Drop a comment and let me know, are you buying HBAR at these levels or waiting for 19 cents? Quick reminder, nothing in this video is financial advice. Crypto is volatile, speculative, and you can lose everything. Do your own research, manage your risk, and never invest more than you can afford to lose. I'm sharing analysis, not recommendations. Stay safe out there.